Welcome to TradeTheMBA.com. This is John. This report is for the 14th of March, and we get a continuation of fear and loathing, so to speak, because obviously the more tariffs are talked about, the more frightened the market gets. But at the end of the day, these are negotiation tactics. It seems that Russia and U.S. are getting closer to something. Whether Ukraine agrees to it or not, we'll see. But it's a net softening of global situations. Now, of course, we get into the continuation of lawfare and the judges blocking all of the cuts that Doge and some of these others are making. So that's really going to complicate things, which we expected. The whole idea is just to tie things up for as long as possible and delay. Now, from a market standpoint, no change. We're still well below 10 here on the readings, and that there's just no interest in anyone wanting to jump in feet first. But this was all told to us by our orange, caught between cyan and red, which is continuation zone. That's all we're getting is continuation. It's the same thing. We had a little bit of brief, spurts of magenta giving us hope that maybe you could push towards the 23%. We did that a couple of days ago, and quickly we expected, though, that it wasn't going to succeed because we didn't get that orange dip. The fact that orange here in the DOC is turning up is problematic for those who want to sustain turnaround. So something's got to give there. The problem was, as we saw, you had to get steel above 13.5, so it's effectively coming from underneath to be more supportive, bullish-wise. Just not there. And you can see the effect of it. Once selling starts, it just exacerbates itself. Nothing's shocking with that. The Nasdaq's slightly better though, because you can see that MDI white is below and magenta leads, but again, you're still below this 10 level, and there's no spark there. It's what I call it when you have this situation where you don't get that dip of the orange on the DOC below. It just doesn't have any oomph to it because there's no rebalancing of the split between buyers and sellers. And in that particular case, you just have more of the same, and it's just that soft slide. Treasuries, not a whole lot of activity there. People just parking some money, waiting. So yield isn't that great. Oil's still caught in a conundrum. We're not dropping. They're not adding to the reserve. You've got to get to a point where it exceeds the demand level that exists out there, and we're not there. Will we get there? I mean, this is the ultimate question, because I don't know that there's the refining capacity to do what they need to do, given the fact that they've really restricted all these things with the previous legislation on production and that, and it takes a long time to ramp some of that stuff up. And this is exactly what we expected, that there would be this time lag through the first quarter all the way into potentially as far as June or later before we start to see the turnaround effect of things. No investment, whatever. Euro's still riding high on its euphoria of wanting to spend unlimited amounts, though I think they're probably going to start realizing that Germany and some of these other places aren't necessarily going to be able to come through with the hope and the goals of doing so, and that will cause the euro to collapse all the way back down. But this is a great savings grace, because it's kept them from absolute disaster that we were at the beginning of February, where you were basically looking at moving subpar. So it's just kind of holding the line, so to speak. Not very well, though, but just barely doing it. And, we predicted this one. No shock there. The move over 3K for gold, it was built into it. They tried to push it down or whatever, but the reality is it's still a safe haven. And the fact that you've seen difficulties in crypto is shifting people into gold now for that safety space. And you can see Bitcoin still lagging, unable to really catch anything. She has potential here now, reaching that above 20 level, so that should be enough if it gets to the 23% to start breaking out above it. Maybe finally has enough to finally get through there. And ETH far worse, and it's just not really catching any kind of momentum at all. And this is the case. So what we talked about the other day was this MBI white spike. And the expectation was that we would move to zero as soon as you get a breakdown of magenta below. And guess what? As soon as that happened and we started to move forward, ended up with some more MBI white spikes along the way, and that drove everything towards the 0%. So pretty much as expected. Now here you get the counter rally where we moved to the zero on the MBI white spike, and magenta then popped up above. That was your signal to flip around and go the opposite direction, because that's going to force the short cover, and that's going to give a little bit of a spike, and that's exactly what we see. So it's all super clean from that perspective. And when we look at it even from the intraday, you can see the put buyers got into it, and then they have to bring in the call buyers to try and ease things up. There just aren't that many that are interested, and that just kept driving things back. Now in the post market here, try to put people upside down so that all that final gamma and everything's wiped out before the market opens, and this should take care of the puts that bought in late thinking that things were just going to continue to collapse. And so that's how the bookmakers can salvage a week where things seem to be quite difficult. But when we look at it in reality, it was all very clean and orderly. So no real shocks. It's just a matter of this whole debate between, what tariffs will do. And of course, they freaked out when the Europeans decided to tack on, tariffs to Harleys and that. And then Trump came back threatening 200% increase on all their wine and spirit imports. And they're just like, oh, but that goes to the consumers. Well, no, because I'm pretty sure you can buy U.S. made wine and or whatever. You don't have to buy the other items from foreign countries. You see, and this is the difficulty that economists seem to have with this concept of the tariffs. If no other products are available, of course, but if there are, then well, you don't have the effect. But it certainly is a bit more crippling in the short run for the EU versus the US. So, yes, there'll be some short term pain in between these, and I think it's going to be reflected in the GDP numbers as they come in very soft. And particularly, it'd be interesting to see how they handle wanting to remove government spending from GDP. And that would be an interesting one to see if they're able to get that squared away. But we'll see. As always, though, anything relevant, I'll put on the Skype chat for you. Have a good one. Trade well.